Welcome back to Blockspace Live. I'm Charlie, and this is Colin. We have a banger show for you today. A big lineup of guests is Coinbase secretly fighting the de minimis tax in Washington. We dive into this conspiracy. It's TFTC versus Coinbase. We also have a hot new Meta protocol launch on Bitcoin OPNET. We have both co-founders, Chad and Danny, in the house in the second segment. We've also got Val Russo going to talk about mining and hash rate projections last year. He absolutely nailed it. And we're talking about Blockfills bankruptcy and Stanley Druckenmiller fades Bitcoin. Blockspace Live is a show at Monday, Wednesday, and Friday at noon Eastern. We feature quick hits on the latest in Bitcoin, mining, AI, and emerging tech. Make sure to hit subscribe if you're on YouTube. Hit the bell to get notified when we go live. This is a podcast as well, so find that anywhere podcasts are acquired. And if you like what you hear, you'll love our newsletter.blockspacemedia.com. This show is brought to you by Clean Spark. Let's kick it off, Colin. So, over the weekend, a non-Bitcoin founder went viral. Travis Kalanick, formerly with Uber, had a hot interview on TBPN as his new Atoms company emerged from stealth. Did you catch this news?
I caught some of the interview, and he was kind of ranting about, like, if you're not working hard enough, you need to be working harder. Kind of typical rise and grind Silicon Valley entrepreneur slop, you know? That being said, the company that we're about to feature here, maybe you can go ahead and pull this up. I don't know how to feel about this, because this is either, the transhumanist take here is that we are going to be wealthy beyond our imaginations in the age of AI, and there's no one's going to be poor, and there's going to be abundance. But then there's the WEF side of me who thinks this is the exact company they have in mind when they say, you will own nothing and you will be happy about it. But I don't really even know what this company is trying to do.
So what is the company? So he put out a blog post. Now, Travis has been pretty low-key for years, since he was ousted from Uber. And he talks about this in his blog. It was ousted from Uber, maybe a decade ago. Really a very popular C-suite guy at Uber. And he announced this company named Atoms and wrote a blog post about it. And the basically it sounds like he's just trying to make a robotics company, if I can be really straightforward,
but apply it to everything. It's almost like taking the Uber model of potentially renting out someone else's hardware or something for a specific purpose. Maybe that's not it, but the idea is to apply robotics to food production and supply chain, to mineral production and supply chain. And there's a third pillar, right? What's the third one?
Oh gosh, I don't know. It's in his blog. But basically,
here we go. Atoms transport, wheelbase for robots. Yeah, so it's food, mining, transportation. So it's you're trying to basically apply robotics and AI for production of commodities and food, and also for logistics of those things, is what it sounds like to me.
Yeah. You remember back in the day when everybody was launching some app and it was it's Letterboxd, but for, neighborhood communities. It's DoorDash, but for townships. Well, this is Uber for robotics, basically. It sounds like, and it's packed with all sorts of optimistic, abundance coded language about how we need to move atoms around.
That change isn't God's work. He's saying changing the environment we live in. Human progress is in service. Human progress in service to the battle against entropy, dust, and civilization. Do some unclear language and typos on this.
Yeah.
Going back to my original point with this, and then we'll start moving on after you have final thoughts on this, Charlie, to the actual news items. What's interesting about this to me is if you listen to Lyft's founder, who actually Lyft was the first app for this. Uber was the one who did it better, and so it got more market share at first. But I was listening to Lyft's founder on a podcast way back in the day. It might have been How I Built This. And he was basically saying that the original idea for Lyft is that no one would have to own a car anymore, and you could just rent a car on demand when you needed it. And when I hear stuff like that, and then I see people working in those service economies, right? These kind of rental and gig economy apps like Uber, when I see them establishing another company, I want to be optimistic and be like, yeah, AI and robotics for all this stuff makes total sense. That's awesome. But also, like, the core function of some of these companies was trying to do more with less and basically obviate ownership over resources for people. So I'm a little hesitant to be like, this is going to be fantastic. I also don't know what the product's really going to be yet. So
it's still ambiguous. It's got a very cool, hot name, and robotics is the investment place that if you can't buy compute from the hyperscalers, then you can at least go make robots. So you'll own no robots and you'll be happy. Let's get into our first story. I'll tag you in.
This really probably should have been on Friday's live show, but we're going to do it on this one because we were a little slow on the draw last week. And that is TFTC and Marty Bent are reporting that Coinbase is lobbying against the Bitcoin de minimis tax exemption on Capitol Hill as Clarity goes through the rigmarole of approval as it tries to become a law. So, cue your Schoolhouse Rock civics classes here from elementary school. But this is kind of I would say there are two things kind of immediately for this. Number one, if this is true, it's not that surprising. Coinbase has more to gain from stablecoins getting preferential treatment in this bill than Bitcoin. And two, the Bitcoin de minimis tax exemption is something that has been fought for and chirped about for a long time.
Can I interject? What is the de minimis tax?
So I was about to get into that. So the de minimis tax exemption basically says if you make a small purchase with Bitcoin, you will not have to report that purchase for your capital gains. So whenever you buy something with crypto, if you're doing things above board, you're supposed to actually report that you bought something, because you may have logged a capital gain on that sale. You buy Bitcoin when it's $10,000, it goes up to $20,000. You buy something with that Bitcoin, your purchasing power increased, and you're supposed to actually, report that. Now, the interesting thing about this is not necessarily the fact that people are pushing for the de minimis exemption. In the original draft of the bill, I think it was like $200 was the de minimis. I believe Cynthia Lummis put an amendment in there to make it $300. So, it's anywhere from $200 to $300 that you would be free from having to report that if your purchase was under that threshold. Obviously, that would be good for Bitcoiners. I think the more interesting and less intuitive thing here is whether or not this should apply to stable coins. And people are probably thinking, why do stable coins need de minimis? It's literally pegged to $1. Well, the fact of the matter is you still have to report it if you make a sale or if you buy something with stable coins. You have to report that you made a crypto transaction in your taxes. And the other thing too is that they're not always pegged to $1, right? Stable coins float. The way that the mechanism remains stable is, there are buyers and sellers in this market acting on arbitrage, acting on market information and arbitraging. When the stable coin goes a little bit above $1 and a little bit below it, they burn it if it goes below to get it back up to 1. They buy more if it goes up above 1 to capture that delta. So with those fluctuations, there's the chance that you actually got like a fraction, of a percentage gain when you buy something with Tether or USDC, right? And so apparently Coinbase wants the stablecoins to have this de minimis consideration before Bitcoin. Now, this is very much a he said, she said story, because one of the first things that came out after Marty tweeted this, if I can get this up, yeah, there we go, was one Faryar Shirzad. He is the chief policy officer at Coinbase, saying, "This is a total lie, Marty Mint. We have never and will never lobby against Bitcoin, ever." This led to one of the great responses to this, that Marty is basically the Alex Jones of Bitcoin, totally clueless conspiracy monger, from Nick Carter. And quick side note on that, Marty actually Marty retweeted this from Nick Carter with a GIF of Alex Jones showing that he actually does kind of see himself as the Bitcoin Alex Jones, which, is, I think, fair.
If you know, it's, they're not wrong. I mean, that's why it's so funny.
No. Yeah. Like, this was Marty's response to Nick's tweet.
Yeah.
And he's totally leaning into it. But, of course, Coinbase is going to say they didn't do that. We have some reporting that, or we have some, we have some journalists coming out in defense of Marty's reporting, like Frank Corva, saying my sources on the matter have also told me that one of the items in clarity that may be on the chopping block in exchange for Coinbase/crypto industry getting interest on stablecoins are the BRCA protections for developers. Deeply disturbing. So not quite the de minimis tax, but there is this idea that Coinbase is kind of trading and going, going tit for tat with regulators, saying, okay, you don't want to give us deposits. You don't want to give us interest on stablecoin deposits. Well, we will drop these other things or support dropping these other things if you give us that. That's the other really important piece here. It's not just about de minimis tax treatment for cryptocurrencies, but there is this provision in the Clarity Act that says stablecoin holders can issue interest to depositors for their stablecoins. So if you hold stablecoins with Coinbase, those stablecoins are, gaining, are accruing interest. Then Coinbase can pass that buck on to consumers. Banks really don't want this for obvious reasons, because it would encourage capital flight away from the traditional financial system. But the exchanges, obviously, to broker power, really do want this, and it would help their businesses, and it would help them retain customers, and also, bring more liquidity into their platforms. So that's the other big part of this. And the last piece of supporting evidence I want to bring up, Charlie, actually, before we get to Brian Armstrong's response here, is with regards to what Marty reported. Jack Shapiro of BPI, he's said, or I believe, he is head of policy at the Bitcoin Policy Institute, said that this is true, that what is going on with Coinbase trying to nuke the de minimis is for stable coins for their benefit. Zach Shapiro says that this is actually true. Whether or not it is true, obviously, is up for debate, because if you go back to the original post, which we'll go ahead and get that up on your end, Charlie, Brian Armstrong, of course, saying this is false. We love Bitcoin. We're never going to do anything bad with Bitcoin, yada, yada, yada.
It's rare that you get like a direct comment from Brian Armstrong about these types of things, and that's why it's so notable. And Brian Armstrong denies this. He says we spend a lot of time lobbying for Bitcoin's de minimis tax exemption, and will continue to do so. We don't have definitive knowledge one way or the other. We have legitimate people on both sides claiming that this is and isn't true. So fascinating, riddled with drama. Any last thoughts before we go to the OPNET, guys?
Yeah, I think just to cap, this whole thing is tied up in what is becoming an incredibly messy, deliberation over what the Clarity Bill will actually look like. If it's signed into law. And I do think the biggest hang up for a lot of the traditional exchanges who are kind of involved in the conversations here, like Coinbase, is this idea of the interest payments on stablecoin deposits. That is huge for them, and it's something they really want. And to kind of put a cap on it, like Charlie said, we don't know what is and isn't true from this. If I had to go with a gut feeling, it would make sense to me that Coinbase would want the favorable stablecoin regulation versus the favorable Bitcoin regulation, because they have more control over the stablecoin ecosystem, and it directly benefits their core business more than something like a de minimis tax exemption for Bitcoin, which really only helps Bitcoin holders. Now, love to live in a world where I think Coinbase is going to do the altruistic thing for its users, but they're going to go with the business case, right? And I once asked someone from the BPI Institute, how is it that Coinbase has so much say in this? And I think that just goes to show how big of an organization it is. And at this point in the game, the largest stakeholders do have a seat at the table, and they are going to have more of a say over some of this legislation than others. But we'll leave it there, and we'll go ahead and bring up the OPNET guys.
We'll do the OPNET guys right after a word from our sponsor, CleanSpark.
We are CleanSpark, America's Bitcoin miner, a publicly traded company with the largest operating hash rate, powered entirely by self-operated infrastructure across 4 states. This is our proof of work, and we are setting the standard for what's next. Learn more about the intersection of energy and Bitcoin at cleanspark.com.
All right, we got the OPNET co-founders, Chad and Danny Plainview. Welcome to the show, guys.
Yeah. Hello.
Hey, thanks for having us.
Yeah, big week for you guys. You're launching OPNET Goes Live after many years, many trials and tribulations, a lot of noise on social media. So you guys formally announced the raise this recently. Tell me about that.
Yeah, so we announced a $5 million fundraise on equity for infrastructure that we've built around the OPNET protocol. And so, yeah, I mean, we're really excited. We partnered with some of the, I think, in our opinion, some of the most forward-thinking and aligned with our vision funds. We were pretty careful and selective with who we raised money from and how we did so. And again, from our perspective, we have a really long-tail vision and view for where we want to take our company and the products that we want to build. So aligning with, funds that kind of supported that vision and had a sort of shared vision with us, that was really, really key for us.
Yeah, I had you on the one of our podcasts like a year and a half ago, Chad. We talked down in Singapore, and a lot's happened since then. Maybe run it back. I'll throw this to Danny. What is OPNET in as simple a word as you can put it?
OPNET is a smart contract protocol for Bitcoin Layer 1 and Bitcoin Layer 1 assets. So I know a lot of the audience here probably, it's basically like Ordinal's BRC20 ruins the user experience, but smart contracts. So everything stays on Bitcoin. Bitcoin is the gas token. There is no bridging. There is no other layers to this. But you have the same, kind of smart contract environment that basically every single other blockchain has. So we're seeing people build out all sorts of dApps, from DeFi to NFTs to actual business models, all on Bitcoin Layer 1 in a way that just simply wasn't possible before.
Yeah, and there's a lot going on. I mean, we could recount some of the high points of the past year and a half. You guys blasting the testnet. One of was it both Bitcoin testnets? I think I don't know.
That's right.
Yeah. So you guys have been very noisy on social media, but now you've actually got to ship something, and so here we are. I know, here we are. We're going live. I think the main thing that's most interesting to me is the amount of interest you've got both on social media, but then you had a big hackathon project over the past month. Tell me about that and what this ecosystem looks like.
Yeah, so about 7 weeks ago, we started investing our time and dev resources into building out AI infrastructure. Now, it's not just AI infrastructure for OPNET related things. It is AI related infrastructure for Bitcoin as a whole. And that really was just never possible before this. Simply because Bitcoin, as I'm sure you maybe know, is horribly documented. There are no standards. A lot of things are totally unmaintained. Things are very old. The governance process for Bitcoin tech is just totally a nightmare, right? And so what we have taken time to do is to document those undocumented parts, and then have a forward-thinking mind of documenting with AI agents and these kind of structures in mind. So we launched something called vibecode.finance just about 3-4 weeks ago. We had probably 5 to 10 serious builders in the OPNET eco previous to this that have been stuck through the many changes we've done on testnet for the past year and a half. And since 4 weeks ago, we started the vibecode.finance contest. There are over 400 dApps that have been built. I would say just about 125 of them use actual smart contracts that work. And it's a totally everything from your favorite DeFi Ponzi to generative art that is like actually on chain. There's people building actual businesses. There's file storage structures. There's new ways of storing images in
encrypted messaging. A ton
crazy.
of
Everything you can think of, and this is all previous to it even being live on mainnet. So we're really excited to see. It seems like just that there was so much creativity and energy in the ordinals and BRC20 early days before everyone kind of realized that you can't build anything past marketplaces with this stuff without requiring custody at least. And so it's really exciting to see that energy and that creativity kind of return back to the space. I think it's this bubble that most people are unaware of, and that's why a lot of these BIP 110 guys totally freaked out last week because they just found out about it.
Yeah, that might actually be the most fun thing to talk about because we could chat about OPNET, the raise, whatever. The thing that like really caught my eye this week is that somehow you guys managed to incur the wrath and ire of the Bitcoin filter camp, the people behind the 110 filter proposal. Like, what in the world happened?
Okay, first of all, I will just say real quickly that we have talked back and forth with Luke Dasher from Ocean Mining, the guy who maintains knots, multiple times over the past 2 years, okay? We've had probably 3-4 multiple-hour calls with him. We've had 2 IRL meetups where he came to our house and hung out here, and we talked about OPNET with him, right? So he's acting like totally, I had no idea this was coming. No, this guy's known about this since basically day one. And
by the way, we did so in order to let him know and consult him, not on like we hired him or anything like that, but just simply saying, look, we know you hate ordinals. We know you hate all this stuff that's happening on BTC. We know you hate spam. So we want to advance what you can do with ordinals. Why do we get excited about BRC20 or ordinals? Because in our minds, there's a huge unlock with offering DeFi natively on BTC. That's why we were interested in ordinals and BRC20s to begin with. That's why we started building within the space. So we told him, look, there is a market for this. There's a lot of people who are interested in doing this. If we were to build a protocol that allowed for this to happen, what is the one most Bitcoin native way to do it? 2, the least offensive to you way to do it? I know you're going to hate it. So what protocol changes or designs could we implement that make it healthy for Bitcoin or make sure that you hate it the least? And that was basically the basis of our conversation with him, is not like him signing off on what we were doing, but just giving us advice on how best to avoid hurting Bitcoin. Because again, we designed our protocol to try and help BTC and try and be able to do more and offer this cool functionality with Bitcoin. So that's why we were talking to him in the first place. And so, and by the way, his consultation resulted in a lot of really, I think, beneficial changes to Bitcoin that we, when we first designed the protocol, we didn't design it with this stuff in mind that inevitably, I think, has built out a more robust protocol.
So these conversations with Luke were basically, hey, how do we make this in a way that won't piss you off and is the closest that you're going to get for a, filter purist in terms of having this protocol in Bitcoin? My next question is, what, just kind of, some page 6 stuff here and spilling the tea, but was he amiable during these conversations? Was he hostile? What was it like to work with him on these solutions?
We had dinner with him for like 4 hours, did this multiple times. I'm telling you, this is expected, of course, because I know everyone has to do the Twitter show, but it is totally hilarious that this camp is acting like they had no. Actually, the first call we had with them was with the entire Ocean Mining team, which
including Mechanic.
What is that guy? Mechanic. Yeah, he was on that call. Swear to God, it just totally hilarious. And again, sorry, just to bring it back to what they said is his advice from the first couple times we talked about on how do you do this in the most non-offensive way was 1, look into merge mining as a concept. That like totally cool. That was like a 6-month thing where we were keeping that in mind. This was before Fractal Bitcoin launched as well, so merge mining started to kind of be talked about. And 2 was if you're going to do it on layer 1, you have to do it in a way that doesn't bloat the UTXO set. And that is literally what we have done with OPNET. Like OPNET TXNs, when you make a smart contract interaction, there is not this tiny UTXO that is bloating the UTXO set like ordinals, runes, BRC20, etc. Like
your node is not data storage for this technology.
I don't know what they're mad about other than it's just pure narrative. Right. Like it is totally hilarious. The politics of Bitcoin.
And I'll explain because it seems to me that a lot of people don't understand the crux of the spam debate. is not as much of a philosophical conversation of how should you use Bitcoin, but a lot, especially the more technical people who are against spam, it's that the way that people are putting data onto Bitcoin with like ordinals, for example, actually damages Bitcoin long-term because it bloats the UTXO set. Every new ordinal that's created is a permanent UTXO, which you do store on your node, which creates this increase in size of the requirement of hardware that you need to actually run a node, which the long-term argument is that decreases the decentralization of the network because it's more expensive to run a Bitcoin node. I'm with you 100% on that. That's bad for Bitcoin, for sure. And that is why a lot of the people who don't like spam on Bitcoin even refer to it as spam, because you're spamming the chain and making it bigger and bigger and bigger. When it comes to this, we completely mitigated that. So we are not spamming the Bitcoin blockchain. We are not increasing the size of the Bitcoin blockchain, and we are not asking you to use your node as permanent data storage. So again, a lot of the pieces of this spam debate kind of fall apart when we're thinking about it. Then it becomes a philosophical argument. Is lending or stable coins a monetary use case for Bitcoin or not? I would argue that using money is not just I pay for a banana, but I can buy stocks and take loans out. Like there are a lot of financial tools that you use money as money that aren't just I use it for payments. And so that's sort of, I think, hopefully where the conversation evolves towards, which is we are still using Bitcoin as money. Bitcoin does not change as money with this protocol. It just evolves to be able to use this money in new ways.
Yeah, so I guess, and it's funny because I sent this tweet to you guys this morning, U.S. time. Like, we are seeing a crazy amount of these types of like conspiracy tweets from the filter camp. This is a tweet that says, "quote I'm putting a lot of work into building a nice OPNET dossier. It's quite revealing." I mean, like this, you guys have managed to draw out some true mania from these folks, and it's funny because I will read a tweet. There'll be people who say like these people are attacking Bitcoin. Their OPNET launches, like March 18th or something, whatever. They'll like literally do your CTAs for you. Like in the tweets, I'm like, oh, it literally seems like a campaign.
Yeah. It's like telling the super religious people hundreds of years ago that like evolution is a thing or that the earth is round, and they're just like, you're going against everything that I believe, and this is sacrilegious. It's like totally hilarious.
And it's almost like the Streisand effect in the sense that the more they try to get people to not pay attention to this or try to like discredit it, then more people are interested in it.
It's a pure Streisand effect, actually, because, okay, dude, we have all gone up significantly. OPNET has gone up significantly in terms of follower count. The conversation around OPNET has increased 100x since they started freaking out about this. And the amount of people who are genuinely interested in the technology and have actually looked into everything, because our documentation is open source, our GitHubs are all open source. You can very easily educate yourself about the core design of the protocol and what it will enable. The amount of like genuine interest that we've had from people, builders, Bitcoin enthusiasts across the board has gone up significantly. So drowning out some of the more schizophrenic noise that's out there about this, it's really been like a huge boon to the protocol hype, especially leading into launch. It's really, I couldn't have really asked for a better thing to happen.
Yeah, it's like.
Sorry. I just have one more question, Charlie, before we close out. Yeah. So you mentioned one of the more interesting parts of one of your answers here was that they wanted the Ocean team and Luke suggested doing merged mining for this.
Yes.
So are you doing merged mining? Is that on the roadmap? No,
we're not.
So, why did you decide against that? I also find it interesting that they would suggest that it actually would help Ocean Pool business-wise, and maybe that's why they're pitching it. But why did you decide against that as a design choice?
We asked him. The context of this question was we asked him, okay, in your perfect world, because our conversation wasn't just purely about OPNET. We were just picking this guy's brain because he's a smart guy and an experienced Bitcoin dev. So we just asked him, if you had full control over Bitcoin, how would you change Bitcoin? What would be the BIP? If you could make any BIP for Bitcoin right now, what would it be? Danny.
And then he said, the answer to that question was directly, he's written the BIP. It's the original BIP, I believe, that introduced merge mining like 2015, 2016. It was never finished. It was never pushed. And he was like, you guys should try and finish out this BIP and make like he basically wants to make merged mine like channels where you can take normal Bitcoin and send it to these like side chains that don't emit new Bitcoin. He wants to shrink the main size of the emission chain, basically. So you have the normal Bitcoin blockchain that has like 300 kilobyte blocks that is only for monetary transactions and for mining new Bitcoin, right? And then you can have channels that you can move your Bitcoin to that don't emit new Bitcoin, and the market for that is just purely based on fees, which is actually a cool idea. That's why it was, so interesting to us. But it's literally not possible. Like it's not a thing you can do with Bitcoin right now.
Right. It's actually a great scaling solution for BTC. It's a great scaling solution for Bitcoin.
For sure. But the problem with merge mining now and always has been that you're introducing like some new shitcoin gas token to your chain. Like it's miners are just gonna like mine it all and then sell it. Look at Fractal Bitcoin. It's literally a straight down chart because the miners are just getting free money. So
I mean, it's not something that we would ever do ourselves in terms of like, hey, look, our entire thing around OPNET is that we want to bring a bunch of use cases to fill the gap in the market for everyone who's looking for yield on BTC. Everyone who's looking for the Bitcoin to become more productive capital. We want to bring a solution for them today, right? That works today. Stablecoins on Bitcoin, major stablecoin issuers can issue on BTC today. Get into a future within 1 year, you can trustlessly trade your Bitcoin for MSTR or Stretch natively on chain without having to leave the Bitcoin blockchain, without having to go to a traditional financial market in order to get a loan out against your BTC or get exposure to the stuff Michael Saylor is doing. Like, I think in a lot of ways, some of the emergent use cases that are going to come from this technology are going to appeal directly to the people who are super against it right now. Again, being able to take out an over-collateralized loan against your Bitcoin where you need to pay for something in real life. You can't pay for it with Bitcoin and you have to get cash or a stable coin. How do you do it right now? You have to sell your BTC or you have to engage with some sort of centralized lending party. If you don't have to do that, you don't have to leave Bitcoin, you don't have to sell your BTC, and you can take a loan out against it or be the counterparty in that loan and earn yield on your BTC. Like, is this not a financial use case for Bitcoin? I think that still remains Bitcoin is money, and I don't think that's spamming the Bitcoin blockchain.
Last question before we play the music and play you guys off. Can we going to run back Ohm Finance? Am I going to be able to 3-3 loop my my
dude?
Bitcoin
Sloan literally just did a pre-sale and raised $250K in under 24 hours. Like the first Ohm fork on Bitcoin. It's called Sloan. They've been building with us for 2 years since the first testnet launched in 2024. Yeah. So yeah, we're super psyched for that.
Yeah, it's already going to be here. It's already coming.
All right, Danny, Chad, thanks for having you guys on, and excited for the launch. Best of luck. Onwards and upwards for the Bitcoin fee market. Cheers.
Cheers,
Take it easy. Thanks, fellas.
Thanks for joining.
Peace out.
All right, Charlie. That was interesting. There a lot of kind of fun little tidbits there about interacting with the most notorious developer in Bitcoin.
Easily some of the most fun people to talk to.
Yeah, we'll be keeping an eye on OPNET. Hopefully, congrats to the team, and then we'll kind of be monitoring the progress here on the pod as it goes along. All right, now we've got a report to dissect with the author Val Russo, looking at the best and worst places to mine Bitcoin. The best and the worst. The worst might not shock you. The mids will shock you a little bit. And I think the best will also shock some people. So without further ado, let's get Val Russo up here. Valentin, welcome back to the podcast, man. How you doing?
I'm doing great. What about you guys?
Fantastic. Man, hello. Good to see you.
Doing great. Spring is in full swing here. And no shortage of things to talk about on the news. Bitcoin is above 70K. That's always nice. And the last time we had you on here, we chopped it up about your hash rate predictions for 2025, which ended up being very good, by the way. If anyone's interested in that research, you can go find it on blockspace.media. Keyword search hash rate projections or hash rate prediction. Val did a really good report for us last year that nailed the hash rate growth within a few percentage points either direction in terms of the error.
It was the most godlike prediction.
It was very, very close. So hat tip to that. And you're back with this new research from Hash Labs, and y'all did a really interesting analysis of, you picked up, I believe, 18 sectors, 18 countries for mining Bitcoin, and you ascribed them a score on an index based on the best and worst places to mine. So I'm going to get the report up here in just a second. But as a way of introducing this, can you give us just a brief rundown of what you found to be some of the most favorable and then also some of the most disfavorable areas to mine Bitcoin?
Yeah, sure. So the global idea of the report was to assess the overall attractiveness from a regulatory but also operating condition perspective. But it's mostly about regulatory because we'll deep dive just after into the sections. The most or the least attractive states were countries, I would say, were Australia by far, and then Sweden and also Democratic Republic of the Congo. So Australia is mainly about many things because you have the grid. The grid connection is quite long, but that's mostly also about the power cost. You have a minimum of $55, if not $60 direct dollar per megawatt hour. You cannot mine under $60 per megawatt hour, or it's very complex and requires a lot of capex. And you have very stringent environmental rules for, namely for zoning on operating data center or just on land availability when you want to develop your own data center. So zoning rules are mostly about emission, heat, and noise level that can apply on your data center. And to close on Australia, it's also about the tariffs. No, the tariffs are quite low, but you have a lot of issues with the customs that tend to delay your ASICs when they arrive. And there is also a bearish perspective regarding the legal framework there, specifically against mining. You can also name Sweden because of the retroactive application of VAT and all the legal backlash against mining in the country. We know also that a few years ago, an electricity tax applied about $40 per megawatt hour. So even if it's very affordable to mine, excluding this power cost, this power tax, it becomes quite a nightmare when you apply the tax onto your power cost on top of it. And finally, I will conclude with Democratic Republic of the Congo. Here, it's mostly about mini grids or off-grid, and it's quite hard to import ASICs there. Why? Because you have about 180% tariff that apply on your ASICs, and it's much better to have your proprietary supply chain when importing materials there. And about the best countries is UAE and Oman by far. Again, it's very favorable legal and fiscal framework, specifically because you have free zones, free economic zones that allows you to have VAT exemption, corporate tax also, and tariffs. So it's that's a windfall for miners. And I will also add that you have very short grid connection lead time, about 6 to 12 months, whereas the average tend to be 12 to 18 months. And when you want to develop a site, when you want to assess your own profitability, such a rapid time frame to secure a grid connection is actually also a godsend there. And you can also access cheap rates. For instance, Oman is between $38 to $45 per megawatt hour.
So I'm curious, Valentine, the US does not feature very highly on here. And you specifically singled out Texas, which makes sense. Probably, anywhere from 30% to maybe half of all hash rate in the US is in Texas, probably closer to that 30, but it is the beating heart of the mining industry in this country. And it comes in at a 56 for the index score. What were some of the dings against the US and Texas specifically when you were weighting it?
Aside from fiscal and legal framework, which are quite favorable there, the issue is the zoning regulation. Even if we know that miners are able to mitigate this issue, when you come to secure some permits, it will inevitably be a pain in the ass to face with the stringent zoning rules, specifically that 10 months with the AI HPC euphoria. And in addition to, I would say, environmental rules, you have also the grid constraints that heavily impacts miners. Here, it's about 16 to 22 months to obtain a grid connection, and which tend to be much faster by the past, and which will inevitably become much more longer in the near, if not the midterm, with again the competition with AI HPC. And obviously, I would close with the types that have been much more important than in the past, because today miners can be exposed to 10 to 30% types. It depends on the classification of your ASICs or the ways in which you can mitigate this the type impact. And also you have the lead time on electrical equipment or ASICs that have impacted miners as well. For instance, on electrical equipment, it has been about 4 to 6 months delay before actually receiving the equipment.
So looking at all of these different considerations, you'll have the legal framework, cost for importing rigs, time to market in terms of getting sites approved. What was the methodology that went into refining these weightings, and which ones have the most importance placed on them, and which are not weighted as heavily when you're creating this index for each individual country? Like, which factors are the most important and which are not as important?
So first of all, it has been about 33 questions addressed to about 48 respondents, and the 33 questions were allocated in 5 sections. The 5 sections were and the most important, energy and grid. So energy and grid covers the barriers to enter the market, the power cost, but also what is your status regarding to a traditional player in the grid. So the grid and the energy section were about 25%. Then you got fiscal framework, which is about 20%. And after that, legal at 17.5%. Same with permitting and licenses. So permitting and licensing is about the zoning rules, the time to get your construction permits, the environmental impact assessments, and all the things related to that. And afterwards, we close with types and custom frameworks, 15%, and operating conditions, which is only about 5%, and which were excluded from the survey. No questions were addressed regarding this matter. It was more about an internal analysis on 3 main factors: the humidity, the diurnal spread, so the temperature and the diurnal spread within the day, because it can impact your machines if it's very important, and if you are hovering some extremes, and finally the summer and the winter temperatures.
I'll probably, I don't know if you have more questions.
No, that's all for me. I was going to kick it to you for a closer.
My I guess to wrap up, Valentin, I see in dead last place, the worst placed to mine Bitcoin that we know is Australia. Who in the world is mining Bitcoin in Australia right now? I mean, why is it scored so low?
It's actually it was very hard to find miners in Australia. So you have very, very small miners there that tend to be private, but so it's mostly about 1 to 5 megawatt installation. You tend to have them in south of Australia, and also a bit in the west. So that's mostly about hydropower and solar plants. And we know that in Australia there are a boom in renewables developments, specifically wind and solar. But as of today, the economics are not so attractive. Still, some miners have been able to manage small installation at some sites, but it remains very, very little.
Well, I don't plan on starting a mining business in Australia anytime soon, and now I really don't plan on.
Yeah, it
that.
looks like no one's going to. Valentin, thank you so much for coming on short notice. Before you leave, can you give people a quick shout out to where they can find more of your work and more about what Hash Labs is doing as well?
Yeah, sure. You can follow me on X at muad'Dib and find all my research. And also, I plan to know covers miners and make projections on AIHPC players. And I will drop an analysis on BitDeer soon. And you can find Hash Labs, which has been rebranded to E2C Partners.
Fantastic. Thank you so much, Valentin. Have a great week, man.
Thanks, Guy. Bye.
So, Charlie, just a quick note before we go on to our next story. If you are curious about Bitcoin mining in Australia, we actually did a show about this last year.
Of course we did. We're like the Simpsons.
Maybe this was the days run like water, as one of my friends from college used to say. So this is our coverage of Bitcoin mining in Australia. I interviewed Daniel Leslie, the CTO of CoinSafe Limited, to discuss Bitcoin mining in Australia. He estimated that there's only around 100 megawatts total in the country. It's a very renewable heavy grid. So per what we were saying at the end of that segment, there might be some chances for solar and wind mining, but the regulatory environment is just so onerous. And one last kind of interesting piece of trivia on this before we move on to the next story. Tasmania was one of the areas where Bitcoin mining first kicked off in the region because it has a lot of hydropower. Tasmania is an island just on the southern tip of Australia. That was one of the original spots scouted for Swan's Bitcoin mining arm when it was still working with Tether to roll that out for its clients.
That's some lore. Am I mistaken? Didn't at the time Iris, now Iron Energy, didn't they come out of Australia as well?
They're based in Australia. I don't know if they ever actually had operations there. I think maybe in the early days a very small footprint, but I can't speak to that because I'm not totally sure. But yes, the team is out of Australia. Company is from there. They actually recently changed their accounting. I think from the Australians do this weird fiscal year that ends in the middle of the year. So like after Q2.
Well, they do accounting upside down. Okay. Let's switch gears. We got to get to the block.
Yeah, so we've got two more stories today. One's the Cry Corner, but this is our last lead story, and that is Blockfills going bankrupt, y'all. Okay, so Blockfills filed for Chapter 11 bankruptcy. I believe this was filed today. I have the court filing, which I'll pull up in a second here. We're pulling from the Miner Mag here, or formerly Miner Mag, now Energy Mag. This Chapter 11 bankruptcy from Blockfills lists their liabilities and assets between 100 million and 500 million. So for those who have never gone down the wonderful, yellow brick road that is Chapter 11 bankruptcy filings, when a company files for Chapter 11, it's a restructuring bankruptcy, which means they hope to get out on the other end. Most famously with this, for Bitcoin mining at least, was Core Scientific. They filed for Chapter 11, I believe, at the end of 2022, and came out the other side of it in 2024, the beginning of that year. And then they turned around and signed the first big AI deal for a Bitcoin miner. So legendary comeback. That's not the focus of this, though. But the point is, these Chapter 11 bankruptcies are designed to make sure that the company can liquidate assets, pay off creditors, and hopefully get back on their feet afterwards. So this doesn't mean that Blockfills is done. That being said, it could be sold. It could be divvied up and basically cannibalized to the point of where it's not really worth reviving. There are a number of different routes that this could take. Another good example of that, Compute North went bankrupt in 2022. That used to be one of the largest Bitcoin mining hosts, a private company in the US. It ended up having all of its assets basically sold off and the company no longer exists. But
so
go ahead.
So I'll interject here. So like there could be a lot going on here, and this is kind of an interesting time for a company like Blockfills to file for bankruptcy. It was suspected that maybe Blockfills was one of the quote bodies floating to the surface after the 1010 crashes, and maybe somehow they are indicative of leverage in the system. But it's, that again, that's speculation. It's not really clear how related that is.
It's not clear. It's worth pointing out, though, because they are a kind of crypto financial services company. So they do lending. They do Bitcoin backed and crypto lending. They have their own loan book. They do trading services. So clearly there is a chance that they could have been caught in some collateral damage in another fund blowing up, or just Bitcoin's price tanking. Maybe they were over their skis. We don't really know why they went bankrupt. Well,
yeah. Well, you very well explained the story. I think the most interesting things are some of the details you've uncovered about who has stake in this. This is one of the wilder LP lists I've ever seen.
Yeah, this is what I love about. I don't like a company going bankrupt, but whenever something like this happens, you can go into Pacer, find the court filings, and then you have all of this juicy open source information about who is involved in these things. So when a company like this files for Chapter 11, they have to list their largest unsecured creditors. And the reason why the Energy Mag covered this is there are a lot of Bitcoin miners who have floated to the surface with Blockfills in this. Now, I don't even want to be that strong about it, because these are unsecured claims, so they might get paid out, but since they're unsecured, they're on the lowest rung of the ladder in terms of getting a payout. Secured creditors will go first in a Chapter 11. Things are liquidated, they're covered, and then whatever's left over, you'll get some. The unsecured creditors get some. Obviously, people who got blown up in FTX understand this, right? Customers ended up getting some money back, but it wasn't the same value that they had, in crypto terms when FTX went under. So all that being said, some of the names that have surfaced from this, and I'll go over the mining ones first before getting some really interesting ones. Simple Mining has an unsecured claim for $3.73 million. Simple Mining is a cryptocurrency mining services company out of Iowa. And, they have popped up in this. What's going on with that? A lot of Bitcoin miners will use these crypto lending services to leverage the Bitcoin on their balance sheet. Who knows if that's what this was, but that's the most likely case. For anyone who's listed on this, they had some sort of crypto loan that was locked up with Blockfills. I can't say that for sure because I don't have a look into the books, but that's the most likely scenario for why anyone would be showing up here. Another really interesting one is one of Bitfarm's subsidiaries, Backbone Hosting Solutions, are on the hook for $4.2 million. And there is another Bitcoin mining name in here that some folks might recognize. That is Ashton Soniat. His Dorado Family Holdings is on the hook for $5.65 million. And Ashton Soniat is the co-founder of the Bitcoin mining firm CoinMint. Now, those are kind of the names that people will know.
Those are the normal names you'd expect to see, but
there's some really weird stuff in here. Like, for instance, a Christian radio station out of Franklin, Tennessee called Loam Media on the hook for $4.7 million. My favorite, though, is the Chicago Blackhawks hockey team. This is real, for $1.26 million, and the address that is listed on the form is for the United Center Arena in Chicago. So United Airlines owns the arena that the Blackhawks plays in. I also think it's what the one of the basketball team plays there as well. And so I saw that one. I had to do a double take. I was like, wait, is this someone pretending to be the Chicago Blackhawks, or is this actually their organization? And so far, it looks like it is actually their organization. One of the more consequential ones is Nexo, which is another crypto financial services and lending firm, is on the hook for $4.75 million. And one of the most wild ones, and then I'll shut up, Charlie, is another miner called Energy Conversion Group. Seems like a totally anodyne name, like, oh, they must do mining stuff. They have Lorem Ipsum on their website.
Well,
So
yeah,
I
they're
don't know
manufacturing
anything
more
about
and
this company. I've never heard of them, but they are listed here as having, let's see, yeah, excuse me. They're listed here as having $1.88 million wrapped up in this thing. Apparently, they're a Bitcoin mining hosting company, but they don't have any real text on most of their website. What's that about? That's kind of odd.
Look, you don't have to have a website to get a loan, Colin.
I mean, clearly not, but what? I don't know. I'm not going to say anything because I don't want to get sued, but what's going on with that company? You just taking money from customers and then you just loan it out? And then I don't know.
Yeah.
Who knows?
Well,
all that being said, there should be more to divine from this Blockfills bankruptcy. So far, we only have the declaration, the voluntary petition to file for the bankruptcy, which was filed yesterday. And it will take, I think, a few days, maybe a week or so before we get actual documents with more evidence about like why this happened, who else is involved. So there will be a big meaty court document that follows this. So far, we just have the voluntary petition. Some interesting names coming out of it nonetheless.
Yeah. So anyway, shout out to everybody caught up in that. As always, we've always got maybe 1 degree of separation from a few people named in because, our boys in mining, the simple mining guys, you know, bummer to see that. Okay.
Bummer to see that for sure.
Last story. This is the Cry Corner. And for those of you who don't know, the Cry Corner is just we pick a bummer story and try to close with that. Today's bummer story is that once heralded champion of Bitcoin, pro Bitcoin investing, Stanley Druckenmiller, in an interview recently, as Pete Rizzo, the Bitcoin historian, says that Stanley Druckenmiller says, quote, Bitcoin is a solution looking to a problem. I am sad it ever happened and it wasn't needed as a store of value. Whoa. Like, where did this pivot come from? Druckenmiller was one of the people to buy Bitcoin, publicly talk about it with conviction, like at the very cusp of the big institutional entrance prior to Michael Saylor, I believe.
I don't know if it was prior to Michael Saylor. These were
around the same
concurrent,
time.
but it was roughly November 2020. He was one of the first big TradFi guys. Granted, he runs a hedge fund. I think that's really important to remember with this, to come out as a Super Bull. And he said, quote, if the gold bet works, the Bitcoin bet will probably work better because it's thinner, more liquid, and has a lot more beta to it. And he was right. Gold was climbing post-COVID stimulus, but Bitcoin climbed even more so and blew its returns out of the water. Bitcoin ran from, I think the bottom in March of 2020 was roughly $4,000 during the, flash crash where everything in the S&P, everything got decimated. Then at the end of the 2021 cycle, at the peak, it was roughly 65,000, somewhere between 60 and 70,000. So he's 100% right about that having more beta. And I think that's part of the reason why he's probably reneged on this now is gold has destroyed Bitcoin over the last 3 years. And he's probably looking at it and saying, well, clearly this has run its course. And if I'm being as charitable as possible to his view, I could see that as a hedge fund manager.
Yeah.
You're bullish gold because of debasement, inflation, etc., a global realigning of the fiat currency system. And so you're looking at gold blowing Bitcoin out of the water, doing the thing that Bitcoiners have screamed Bitcoin would do under these macro scenarios. And you're looking at this thing and you say, no, I'm going to take the pet rock, the physical pet rock, and I'm going to leave behind the digital pet rock. That to me seems to be probably where he's coming at. And again, he's a hedge fund manager. That's what they do. They are not long things just to be long them for a generational bid. They're trying to make money year in, year out. So,
yeah, well, Stanley Druckenmiller was heralded by a lot of Bitcoiners as being like the guy who finally got it. He's the big boy. He's somewhat of a contrarian. He's got a long storied, successful history. He made a bet with conviction at the right time and then was proven right again and multiple times, doubled down on it, or at least indicated that he strongly believed in it still. And now here he is saying, quote, I'm sad it ever happened.
That is
Wow.
wild. That's
Yeah.
a kind of crazy thing. What do you mean you're sad it ever happened? You probably made a lot of money when you traded it. That part I don't understand.
But he made a lot of fiat, Colin, and that's
I guess.
just
And then he rolled it
not
into
okay.
gold and then probably made a lot of money on that gold. You know, he's one of the most legendary hedge fund managers ever. So this is kind of sucks to see. But, you know, someone will put it in a Bitcoin obituary. You'll have, you know, the Bitcoin maxis of the world who are like perpetually bullish, like BitPain, basically saying how this is dumb and Bitcoin's going to pump. But I don't know. A lot of people really, I mean, this really does. If you were going to mark like conviction lows, this does seem to be the last few months, particularly after the February sell-off. There have been a lot of people rage quitting or saying like it's absolutely over. And I'm not going to say that it's over one way or the other. I'm not going to say that I'm uber bullish right now, but I have to say Bitcoin being above 70K when all the other assets are shitting the bed feels kind of sweet.
Hey, I'll also point out in the interview here, I don't believe he said that he sold Bitcoin. So I don't think he said that it's changed his position. Although, you know, these investor guys, they don't have to say everything. They don't have to disclose everything. So, Cry Corner closed this week. So,
congratulations, you're all poor again. Just kidding.
Congratulations, you're all poor.
73,000.
Actually, Bitcoin's up. You know, Bitcoin's 74K right now, which is higher than last episode. Anyway, wrapping this up. If you're a listener, make sure to like and subscribe. Subscribe to YouTube. Make sure you're following on X, and check out our newsletter at Blockspace.media. And hope to see you in New York City on April 16th for the OPNET conference, Bitcoin's technical conference featuring discussions from the brightest minds in Bitcoin development and investors. So opnext.dev. We'll catch you all later. See you Wednesday at noon Eastern. Peace.